Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, March 29th, 2022. The rallies continued today, and I've made a slight adjustment, but I just want to recap where we have been, where we're going to. We remain in what I'm believing now is the C wave up for an intermediate second wave bounce. The whole structure consists of a minor wave, A, B, and C. Because of the intensity of the buying, the strength behind the buyers to just push, did make that B wave pretty small, but intraday it was nice. It was a great trade and it worked. And so it actually has already happened. And now we're in this C wave up. But let me just, I digress. Let me just review real quick where we are. Again, I was showing that this high at 16,767 is where I've marked the completion of intermediate 5, primary 5, and cycle wave 5. So we are in the beginning stages of a larger, longer term corrective decline. So what we have done thus far is we have come down in what I've labeled as an intermediate degree first wave. So I had to count 5 waves of minor degree, which have 1, 2, 3, 4, 5. And it's not been the easiest count. It's not been the cleanest count. The future has been wacky against both sides of trade. And then from about March the 15th, this market and all of the equity markets have actually just launched higher and now have consistently gone through that March expiration, which was quite large. And as I have mentioned previously, I do believe that there are going to be additional large settlements from options expirations. And I believe that they're all now happening also on a weekly basis versus just the monthlies. So if I take this down, we remain in that intermediate wave 2. And we, as I've said, and now we'll demonstrate, that we have completed the A and the B wave, so the minor A, the minor B of intermediate C, of intermediate 2. So we're in a minor C wave, which will be 5 waves. And I believe what we've done thus far is minute 1 and 2, and I think this is all of 3, and we're pulling back. At this very stage, we need to continue to allow, once again, for a break towards next resistance at 15,315, excuse me. If this completed this third wave, then we are more than likely going to get a pullback. And it would be nice to get down to that lower 15,000 level, so like 15,032, all the way down to possibly 14,955. That would be a very decent pullback and keep everything in alignment for a finishing rally. And that would be wave 3, this would be wave 4, and we'd be into wave 5. And again, based on what we have done thus far, it still appears that we will get more up into this zone. And actually the zone's pretty big at this point. We have 15,520, 21, and then overlap. But that's above 15,600. So it's 15,640 to 15,670, 72. And then topside, we have 15,813. I am feeling that this zone, this higher zone, will contain the balance of the C wave. And it should, again, what have I said yesterday, and may happen again tomorrow. I said, if the NASDAQ goes up an additional 225 points, which it had done yesterday, that would put us above 15,200, and sure enough, here we are. So far, so good in terms of the patterns still fitting within what we're doing and within also just what they, on the larger front, have been doing. And basing it on, I'm going to tell you right off the bat here, They're basing it on nonsense. And the bullishness cannot mask the stench that's coming out of the bond market. And I'm not sure anybody's really been paying attention, but obviously they're trying to sell us a bill of goods to keep buying this. And it's understanding that it's the quants that are buying it. They're not buying it for any other reason that that's where the premium is and they can do the trades and make their money and be done. That's the other part. And as long as it continues, why would they need to stop? So we need to play along. But with the understanding that I think when this thing switches, when this is done, and we drop into that third wave, whether it's 15,600, 500, 800, or higher, it's not going to make any difference to what comes next. It's just that the higher we go, the more severe that initial dive is going to be. So as thin as we are getting on the way up, that will be covered on the way down. If there weren't any sellers, I don't suspect there's going to be a lot of buyers wanting to get back in. The buyers are going to want to get out. And guess what? Those traders who have sold or had short positions are the ones that are going to buy. I don't think they're going to be stepping up real quick. So anyway, I want to also just put it out there that please do take a look at the bonds. This, I need to go up to the weekly chart to show you the true damage that's being done. This is the 10-year note. And you can see that basically from August of 2021, the market's been pretty steadily declining, but definitively from the beginning of March, we have dropped from 129.40, 129.04 to 122.085. That's the high of today. We actually were lower, 120.305. So the 10-year note has caved. So if you were to say this is the canary in the coal mine, canary's dead. That's on the 10-year. Let's look at the 5-year. That's the 2-year. The 2-year is the worst. And just look at this. It is straight down. So this one now on a weekly has been dropping 1, 2, 3. This is its 4th negative week, and it's not over yet. It still has 3 days. So it's kind of rallying up off that low, but it's not looking very good for these bonds. I just did G and it told me it was gold. So let's try that. There we are, the 5-year. So look at the 5-year. Same story. Same story. These are pretty steep declines. And these are interest rates. So these are rates flying and the bond price dying. So how long do we want to think that the NASDAQ can go on? Well, I'm going to tell you the truth. There is no, we can try to measure via emotional levels, but that's not, I mean, they're good and the Fibonacci's work and we get up into them and they do make their moves from it. But in terms of calling where a larger turn is going to come, at this point, it becomes very difficult. What needs to be thought of is that we continue to trade what's in front of us. So that means you go along with them. Because if you're a day trader, you're out at the end of the day. You're making your money, hopefully in the first 2 hours. And you're just kind of taking the balance off. So my point here is that we need to kind of start to reset our mindsets about carrying a position, carrying a long position, carrying, different types of spreads, because we're going to get into a quick, what I see as a quick, no matter if it's here, 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 or here, the turn will be twice as hard as that. I believe the turn will be more straight down. And this is a daily chart. I think it's going to start to look like those interest rate charts. We just have week, day after day of strong before you get to catch your breath, and then more declines. Right now, the market is absolutely not paying any attention to it and saying that, well, this was a relief rally because the Ukraine and the Russian sides have sat down to discuss neutrality and moving forward, not in war. But I have to tell you, go back to when Putin invaded and see what the market did versus where the market is right now in its relief. So again, canary in the coal mine, the 800-pound gorilla, the elephant in the room, whatever term you want to use, is inflation. And now you're going to have to attach recession onto the end of it, and also interest rates. And that is being ignored by the equity market. And again, it is Tesla, Amazon, Google today came to life, Facebook today popped to life, Microsoft again is popping to life. There are trades to be done in these stocks, and that's why they're going to continue. Right now, the trades that are being put together all kind of involve, or a lot of them involve, long stock. So up we go. And as long as they're given the money, it's going to continue. So for tomorrow, continue to leave upside room. We may have yet still to see a larger ABC or an A and a B, or just a B wave, excuse me, to complete the larger B wave, but I don't think so. I think it came in shallow, and I think that that's what we've now seen. So we need to allow for continued upside before we get a smaller pullback in the way of a wave 4. If this is going to be that top of minute 3, I'm not so sure. But so leave open the potential, and it could happen overnight, that we get to 15,315 above into this level. And if then we start to pull back, it's going to keep it nice and clean. So it'll produce a more solid top for this minute 3, set us up for a decline back into this zone, because this is the previous 4. And then we also have our moving averages to also give us additional support if we get that turn. So not knowing where, leave open the potential that we'll start from a higher level. But it doesn't change the reason that we're going to drop just because it's overbought and we're going to pull back, but also because we will continue to look for the area of the previous 4th to come into action to control the decline, to cap and keep in line the small correction before we get that 5th wave up. So 2 things. If they both happen overnight, then we're looking for this to all come into play with the 5 coming up. Now again, Wednesday, we still have Thursday and Friday. So this could roll out. And as I just said before, the zone, in my mind, continues to be right here. So we may play, and Friday might be the day where they decide to push it, because again, it's a weekly expiration. It's again, a lot of money settling at prices that these algorithms are predetermining without us. So they're pushing it because don't forget, they get the trade on and they got both sides. So it can be a closed trade and something that you just add later, and they're turning things into conversions and reversals, or doing them all at once. And it gets moved off. That position is, as far as the trader is concerned, is closed, absolutely risk-free. So no matter what happens to the stock or happens to the options, it's all covered. So leave room to the upside. And I'm looking for a completion of the 3rd wave. I'll pull back to 4, and then a 5th wave up. And that then should mark the minor C wave and the intermediate 2nd wave conclusion. Once that's done, folks, and again, no matter from what level, I am looking for a much stronger push down, a push lower, and to start off with a real shock in the jaw. It's going to be a shock. It's going to be like, holy crap, we're going down, because it's not going to stop. That'll be the kickoff. All right, I'm going to leave it right there. Our next update will be on Wednesday, the 30th of March.